Over the past 4 decades, China's economic rise has been nothing short of extraordinary, and if one word were to describe it, miracle would be the perfect choice. You've likely heard about it and may have even witnessed it firsthand, how China's growth left the world in amazement. However, all of those may be coming to an end. In this video, we'll delve into China's remarkable economic rise and explore whether this growth trajectory is set to persist or reach its limit. Before we proceed, we kindly request you to subscribe to our channel so that you will be updated with captivating videos covering the latest developments across Asia. Now, let's talk about China's economy. The slowdown in China's economy. Following a robust start to the year attributed to the country's reopening after the pandemic, China's GDP recorded a mere 0.8% expansion during the 3-month period from April to June. This figure falls significantly short of the Chinese government's annual growth target of approximately 5% for 2023 and is a substantial departure from the double-digit growth rates achieved during the nation's miraculous economic era. Within a mere 40 years, a small fishing village underwent a remarkable transformation, giving rise to the sprawling metropolis now known as Shanghai, often referred to as the Pearl of the Orient. Just last year, Shanghai's GDP exceeded an astounding 4.4 trillion yuan, equivalent to approximately $663 billion, a figure surpassing the GDP of most entire nations. And then there's Shenzhen, a similarly modest village nestled next to Hong Kong, which, in a matter of decades, evolved into a thriving megacity renowned for its prominent Chinese tech enterprises such as Tencent, Huawei, DJI, and BYD. Today, China stands as the world's second-largest economy, trailing only the United States. Many experts even foresaw that if China's economic miracle continued, the nation would surpass the United States and emerge as the world's largest economy within the next decade. However, the trajectory isn't always perpetually upward. As the world gradually emerged from the pandemic, there was widespread optimism and hope for a robust resurgence of the Chinese economy. Yet, in 2023, this eagerly anticipated boom has yet to materialize, and the Chinese economy now confronts its most substantial deceleration since the reform era of the 1980s. Following the release of these statistics, reports on China's economic deceleration quickly gained widespread attention, particularly in Western media. Speculation of China's impending economic collapse seems to be pervasive. Nonetheless, negative narratives concerning China's prospects have been circulating on the internet for quite some time. Speculations about China's potential economic collapse have been a topic of discussion for the past decade. While China may indeed be grappling with an economic slowdown, it's crucial to emphasize that this slowdown doesn't equate to an impending economic collapse. While China's GDP growth witnessed a decline in the second quarter of this year, the nation's imports and exports surged by 4.7% compared to the previous year. Notably, China's trade with countries linked to the Belt and Road Initiative also experienced a substantial increase of 13.2%. Private enterprises within China played a pivotal role, accounting for 52.8% of the nation's total trade, marking an almost 4 percentage point increase compared to the previous year. In June, the World Bank revised its projection for China's economic growth this year, forecasting a 5.6% expansion, which is 1.3 percentage points higher than their January estimate. The International Monetary Fund also anticipates that China will achieve its growth target of 5.2% for the year, making a substantial contribution to global economic growth. In reality, sustaining double-digit growth rates every year is an unattainable feat for any nation. To put things into perspective, even the United States experienced GDP growth averaging below 3% from 2010 to 2020. And it is the same for Europe, where the GDP growth over the past decade has been hovering below 3%. China's economy isn't collapsing anytime soon. For a country's economy to collapse, many of its economy activities and functions will show signs of weakness before it tumbles. However, in the case of China, as we have shown you earlier, the export and import for the country have increased compared to last year. In addition to the rise in imports and exports, a significant factor in assessing the country's overall economic health is the amount of money that people save in their households. For example, in 2022, China's households saved a substantial 17.8 trillion yuan, which is about $2.6 trillion. In fact, China is renowned for having the largest household savings in the world. These savings can be utilized to boost the nation's economy by investing in infrastructure projects and providing loans to help businesses expand. Spending by consumers made an impressive comeback. During the summer, from June to August, a substantial 1.839 billion domestic trips were made, bringing in a revenue of 1.21 trillion yuan, as reported by industry data. Many sectors of the economy showed strong growth, with some achieving record high numbers in this period. For instance, the total earnings from movie ticket sales reached an all-time high of 20.6 billion yuan. Moreover, Starbucks, the world's largest coffee chain, witnessed a remarkable resurgence in sales in China. In the most recent fiscal quarter, this American coffee chain recorded a 51% year-on-year growth in its revenue from China. With 6,480 stores already in operation in China, Starbucks plans to increase that number to 9,000 by 2025. It wouldn't make sense for Starbucks to expand if China's economy were on the brink of collapse. Additionally, Chinese companies have outpaced their American counterparts in terms of the number of companies featured on this year's Fortune Global 500 list. Experts in the industry have pointed out that this list underscores China's increasing influence in emerging sectors like new energy on the world stage. A total of 142 Chinese companies, including those from Taiwan, secured a place on the annual list, marking the fifth year in a row that Chinese companies led in terms of quantity. The United States and Japan followed closely with 136 and 41 companies, respectively. How about the recent report of high unemployment in China? The surveyed unemployment rate for the 16 to 24 age group reached 20.8% in May, up from 20.4% in April, marking a historical high. However, a Chinese spokesperson offered some insight, stating that in May, 33 million individuals within this age group entered China's job market in search of employment. Among them, 26 million have secured jobs, while over 6 million are still actively seeking opportunities. Additionally, in 2023, China is set to produce a record-breaking 11.58 million fresh college graduates. This indicates that the issue of youth unemployment may persist longer than initially anticipated by Beijing. The positive aspect is that China is cognizant of this challenge and is adopting a realistic approach to its growth prospects. China may experience an economic slowdown, but not a collapse. Certain Western media outlets have been prolific in publishing sensational articles that criticize and tarnish the Chinese economy, featuring increasingly pessimistic and fear-inducing headlines. However, these bleak predictions about the Chinese economy are largely products of imagination and serve as a tool for some Western politicians and media organizations to divert their domestic audience's attention away from local issues, while also attempting to discourage other nations from collaborating with China. The actual scenario is that the Chinese economy is firmly on the path to recovery, driven by a growing emphasis on innovation and environmentally friendly development, despite encountering difficulties and challenges amid the global economic slowdown. According to the International Monetary Fund, China's economy is projected to expand by 5.2% in 2023, while the United States GDP is anticipated to grow by 1.8% this year. In the first half of 2023, China's GDP growth reached 5.5% year-on-year, outpacing last year's 3% annual growth and ranking among the best-performing major economies. The US GDP growth rate is less than half of China's. Business leaders worldwide have shown their confidence in the Chinese economy through a plethora of newly inked contracts and projects. As per a report by the European Union Chamber of Commerce in China, nearly 60% of the surveyed companies plan to increase their research and development investments in China over the next 5 years. It's important to highlight that China didn't rely on traditional, flood irrigation-style massive stimulus measures to boost its economy. Instead, the country experienced robust growth in its sharing economy, supported by digital technology. The Chinese central government is increasingly responsive, implementing policies that align with market demands. With this ongoing trend, the Chinese economy is poised for another upswing during the next round of interest rate reductions in the United States. We have a strong conviction that China's economy is not on the verge of a collapse in the near future. In fact, a more pertinent question to consider is not if China's economy will crash, but how vigorously it will rebound when the global market, on the whole, begins to recover. Can it maintain its remarkable growth and surpass the United States to become the world's largest economy even sooner than anticipated? If you find the content engaging, please show your support by hitting the like button. Most importantly, subscribe to our channel to ensure you receive captivating videos covering the latest developments in Asia.